With the market roaring ahead to new highs, CBA cracking $1.60, the S&P 500, Dow Jones also pushing higher, coming into Thanksgiving week, where there's no trading on Thursday in the US and a half day on Friday. We look at the levels to see where's the magnet drawing us to, what could be the next level that the indices top out at or get drawn towards. And then we're looking through in the Aussie side of things, where the best trading opportunities are on the Australian market. Man, he's done all the research, compiled it together into his weekly report, is Gary Glover from Novus Capital. Good morning, Gary. How are you?
I'm good, Chris.
We're having a conversation about a few things in the market and where it sits, but the cycles are always interesting for me. Where we are in the market and the indices, that sort of, in your little commentary where you send out and attached to your email, is about where we are in the markets and what they're looking like. The NASDAQ's the first chart in the report. And you've got those two parallel red lines sort of being a bit of the channel that we're in. We're almost just north of the halfway mark. Does that coincide with sort of a target for you? How do you read that channel and the targets and the fib levels for where the NASDAQ is?
Yeah, look, it's a reasonable level of the 150. I would have thought we'd go to the 161.8, just because that is the 20,000 level, Chris, as well. It's just a bigger level there. Just, if we go back and sort of study, the kind of history of the markets there, if we're going to sort of mark these sort of, these more important peaks, we tend to sort of hit these sort of round numbers sort of more importantly. Yeah. So we can see, we just see in front of us there that we hit that 16,000 there last time, just poked over it for a day or two here. It's just funny talking about CBA at 160. That's, it's a big level as well for CBA. I mean, there's no way I would have thought that stock would be anywhere near that. 28 and a half times earnings. I mean, that's something with no earnings growth. But hey, let's not look, Bitcoin's at 100,000. I guess CBA can be at 160. That's probably fair. But yeah, we're getting a bit stretched here. The NASDAQ actually is probably the index probably showing the least sort of strength there, Chris, at the moment. So, we got the Dow and the S&P sort of, expanding. The Dow's obviously the strongest index. That's, it just looks like it's going to reel in the 45,000 here. But that'll be a big level there. That's an expansion of that previous range there. So I think that'll be, there's to be some reasonable resistance at that level there. So, yeah, we're not far away from there. We're up again last night, pretty strong on the Dow. So we're definitely approaching some key levels here. So so this whole thing's been winding up here. So kind of gaining momentum there. So but funny enough, the NASDAQ hasn't been as strong there. That's only at the 150. So we're well short here.
So just to draw the comparison, the 150 talking about the expansion, the Dow Jones, that's at 200, which coincides with about 45,000 on the index. And then what you're talking about is the expansion here on the NASDAQ. Scroll back up. That's the 161.8, which is kind of why you're saying it's not as strong, right? Because it hasn't expanded as much. And
no, look, might be an argument. It's been a bigger correction in there, so it's harder to have that type of expansion there. But still, hasn't expanded, hasn't gone to a new high, and as fast. So it hasn't sort of kicked on as fast as well. So not showing as much strength there, the NASDAQ there.
And what about the S&P 500? This has a different signal, so it's like a ascending wedge as opposed to the channel that you highlighted before on the NASDAQ. And you've got the 200 extension point marked here as well, a bit of a magnet, maybe not 6,200, a bit shy of it, but not far from it. How's your interpretation of what's happening on the S&P?
I mean, look, this is sort of, it's obviously well above the NASDAQ but yeah, probably just not quite as strong as the Dow here, but yeah, still in pretty good shape here, Chris, really. So, has been sort of winding up. Similar down, so it's pretty strong position there. So it still looks like it probably can get to that 300% level there, slightly higher there. So, I mean, we're kind of getting close here now. I think the S&P 500 was up around, or it did go above 6,000, 6,020 here. So only 120 points away there. So, We're 5 or 6% away, really, so not that far. So again, I think that'll be a sort of a big level going up there. So yeah, just sometimes I notice these levels, they can pull up short and then have a bit of a reaction and then go back and retest and maybe go to a new high, or hit the level and then come back and then make a lower high after that. So yeah, look, interesting. You're definitely getting, saw a few, as I was talking earlier about, a few cycle guys are, that I follow, they're a little bit nervous here at the moment. Obviously, if you look at, price Schiller, look at a lot of the sort of valuation metrics there. Market's pretty high there, so getting up sort of what that's COVID high and 2000 high. So we're not quite as high as the 2000 metric, but it's but we are historically very high valuation here at the moment. So we either need earnings to really have a really strong kick on here, which market sort of is reasonably buoyant that maybe AI can help do some of that. But yeah, we're getting probably we'll be getting up here. So I'm getting a little nervous as well. I'm just feeling like we're it might be a little bit to go here. We're sort of coming into the end of the year, which typically is buoyant there. But yeah, just probably my view is by the end of the year, I probably would like to we have a lot more cash built up here in the next month or so.
Well, just on that, those cycles that you were sharing with me, I know we don't have the chart in the report, but what key takeaway I took from that was, aside from the 99 tech boom bubble crash, that high, most recent one we had was during COVID, where we had artificially low interest rates and then a lot of stimulus pushing the market up. So if we're back paralleling those similar price earning valuations before we sort of hit the skids and had to have a fair few changes in the markets, that becomes the second highest point, and haven't been many times that it's been that high. But,
no, that just tells you that you're potentially paying what the second or third highest valuation in the history of the markets at the moment. So you got to put that in context. I know momentum is a beautiful thing and can drive things on here, and we're seeing here with CBA, regardless of fundamentals, it can go a lot higher than everyone expected there. So obviously equity markets can do the same here. So they can drive on further here. No doubt they're expensive. So market's just looking a little bit forward here. So we have seen some improvement in earnings in the States there, Chris, but I still think not. I think the number of companies are still not shooting the lights out, you'd sort of say. So at this stage, but yeah, I think everyone's trying to look forward here, saying, okay, AI is going to help, Trump taxes are going to help, so they're saying all the things that can maybe boost earnings. Look a bit forward here. That's sort of driven markets on a bit further. So yeah, it does have the potential to go a little bit further here, potentially, just on that sort of sentiment of the positive things from us, but does feel like it's sort of, it feels like everyone thinks the market's going to go higher, Chris. There's almost a level of complacency here, and that bothers me a little bit. So, I think once, the market universally agrees on something, we know that's not a good sign. So,
they agreed on the wrong thing. When they universally agree on it, they've normally agreed in the wrong direction on the wrong.
Yeah. So just, I think, look, we stay with momentum here, but, I think, I think over the next month or so, I think it'll be wise there to start doing a little bit of banking there and into the strength there. So hopefully we can kick on a bit further. But I think those, to be honest with that, the Dow getting to 45,000, S&P getting around 61, kicking on 40 there. That's probably telling me to ease right off if we get those levels there. We look like we're pretty close, so we have a good chance of getting them sort of soon here. So, yeah.
Well, when we look into the markets, obviously there are sectors, industry groups, and so on. So there are different parts of the market. They're all moving at different speeds. Together they form the index, and they give us these indices, these charts that we look at. But down into the layers, one of them is energy that you looked at and talked about more recently. So we'll come to that in a second, because I really want to talk about some of those companies in there that you see opportunities in. Before we do, we want to take those same parallels that you've talked about on the US indices into the Aussie index. It seems to be less extended than what the US markets have been. And that may indicate that we have less to fall if it does get hit, or that we've just nowhere near as good as the US in performance at the moment. What's your take? Is there any change now that we've sort of pipped up to a higher close last week on the Aussie?
Yeah, we're just kind of grinding out here, so we still sort of maintain our trend there. So, yeah, I mean, look, we've seen sort of, just clear signs of buying these dips so far, Chris, along the way here. So anytime we've had a bit of a pullback there, we've definitely seen volume sort of come in. So, yeah. So look, starting to see volume taper off here over the last 2 months. So as we've sort of gotten higher, we've definitely seen that volume start to subside. That's only natural. But yeah, sort of, I think as we get a bit higher here, I think there'll be a little bit of, it's just some concern there. So of that. So, again, look, we can still sort of grind a bit higher here. I still think the trend's still sort of positive there, but, I think it's about momentum. Maybe we'll see momentum sort of slow down a bit there. But look, the good thing so far we've seen definitely rotation within our market. I think we just need to keep seeing that. So, we're not seeing all the sectors run at the same time here. It's just, obviously we've seen materials weaken off here recently, and the financials are just shooting the lights out. But yeah, we have seen a bit of rotation as well. So I've seen some of the healthcare stocks sort of go up, and then we saw some of the travel had a bit of bounce recently. Just seeing sort of gold, sell off and then bounce again, and then start to come off again. So it's healthy to sort of see some of the rotation continue within the sectors. That, as long as we keep seeing that rotation there, that's healthy. It's probably when we see everything start to line up and run together. That's the concern there as well.
Yeah, spot on. That higher correlation within the markets can sort of be a crescendo top, because then they correlate together on the way down even faster, and higher correlations.
I think the big concern for me, Chris, as well is like when I look at those valuations on the banks there. I mean, we're talking about, now I can understand why they're trading where they are, and there's really only a couple of rationales for that. Obviously, that there's a bit of safety in the banks. There's also when we initially had high inflation, the market tends to sort of go looking for value shares, so it goes looking for the yield here. But see now the yield on CBA is less than 3%, so you're getting more yield in the bank, and so that yield's no longer there. The element of safety is not there anymore. So the concern I sort of see is I think the banks can have more than just a 5 or 10% cool off here. I mean, the reality is that they could easily sort of pull back 20% here below the financials. I don't think it's going to happen until next year, but I can see that happening next year. Just because I think there's just no earnings growth there, Chris, and the multiples are really, really high here. So so look, unless they can really get their earnings growth sort of moving forward here, but just that there's just so many. You've got AMP and Macquarie making inroads there, but all those sort of little judos and other banks as well. It's just really, really competitive. So it's gonna be tough space there to sort of to do really well there when it's in a really competitive area.
Yeah, generally more competition squeezes earnings margins and multiples and net interest margin, but they're defying gravity as they go, and who are we to stand in front of a roaring freight train?
Exactly.
What I do find interesting though is you and I talked about this a couple of weeks ago. You noted in the launchpad that there had been a few energy companies at the same time. Pretty much any analyst that came out and spoke publicly in Australia was saying energy's dead, don't hold it, don't be in there, it's over. And shortly after, we've seen a bit of a pop. We've got the weekly chart here, Woodside, and you can see there has been a bit of a pop, bit of a double bottom. We're not quite sure. You've got ABC showing on here on the charts. Maybe that's the ABC. It shows up with a 2016 low. I'm possibly stealing on your thunder, but I imagine there's a bit to talk about with the energy and what you're seeing on this chart and why you're putting a chart that's been down and how it fits into your rotation. So I've given you a lot to talk about there. Take it away.
I mean, look, there's no doubt still obviously in a pretty nasty downtrend there, but a couple of things we have seen, Nicholas, is we've seen, Woodside, kind of make the first high low, not go to a new low in the same amount of time. So like normally we've rallied there, 3 or 4 weeks, and then within 3 or 4 weeks, we didn't take the low out. So that's actually a first sign of sort of positivity there. And then we've sort of started to, we've got a first sort of higher low in here, and then we've got a bit of volume sort of coming in on this bounce as well. So we've got some, some signs of positivity, so some positive shoots there starting to, and look, at the last couple of weeks, everyone's very negative energy, just oil there, and just think there's an oil glut, and every analyst I heard talking about was just saying don't go near energy. I saw okay, that's it tells me that if everyone's already sold it, Chris, no one's left to sell it. Like if every broking house has told their clients to get out of energy, then they're already out. So they're not, so they may not be saying buy it, but it means that, they've already sort of sold it here. So everyone's already exited that trade here, the way I look at it. So that's when you sort of can get a turn here. So just interesting, you're starting to see, I was looking through some of the sectors there, saw a bit of a bounce in the oil stocks, saw a little bit of a bounce in the coal stocks here recently, and a bit of a bounce in uranium as well. So that one, okay, you got all three energy sort of areas all sort of having a bit of a bounce. So look, might just be, maybe it's just a counter move here, but the one thing we did see was saw volume in all those rallies, and we pulled back some of, I think uranium's had a bit of a pullback there, but hasn't got aggressive and the volume's dried up. And I think even the coal stocks as well have had a pretty good bounce, good volume, pulled back and used up a lot more time. It hasn't gone to a new low as well. So it's sort of struggling to go down here. So just, it's an area looking interesting to me at the moment. So, I guess mindful of, we do see an uptick in inflation there, or, increase in tensions there. It's funny, like one of the most, interesting segments in the market, and it's been an interesting segment in momentum stocks as well, Chris, has been in that defense, area. So like a lot of defense stocks have performed pretty well here and are doing very well with this climate. And there's a few more defense stocks sort of coming to market here. And
there's ETFs that came to market in the last few months, which is 12 to 18 months after the thematic starts running.
Yeah. So definitely got an escalation of tension sort of around at the low here, and energy companies are doing pretty well at the moment. So it's just, so defense companies doing pretty well. So I'm just worried what that means for energy here. So it's just a segment I'm watching pretty closely there. Just seeing some positive shoots across the board there. So, they're all just sort of showing sort of signs of sort of some positivity, and everyone's calling to the death of them. I think that's usually a time where they do sort of find a bottom here, sort of thing. So I think that's looking interesting to me.
Well, look, before we move into the other parts of energy, there is Santos in the chart, in the report here as well. Similar sort of thing. We're looking at multiple lows here, the same sort of level, 680. Pushed through it a couple of times, but only temporarily on the weekly chart. We tested that, what was that, back September, coming into October, rallied out of it. We have come down further. So you were talking before about Woodside going up a few weeks and back, but it's sitting at higher low. How do you interpret the move with Santos, where it rallied for a week or two and then has come down 1, 2, 3, 4, 5 weeks, undercut the low, but has since turned? How do you interpret that movement in comparison to Woodside?
Yeah, I was a bit nervous last week because it was the first time we had a close under that low here. But again, when you break a key, big level, technically, and what we see volume sort of dried up here in those sort of 2 weeks of low. So now we've had a bit of a bounce here, and the volumes come straight back in. So again, we're sort of bouncing off that key support. We've gone to it. We've broken the lows. They're closed below the lows, but it hasn't gone on with it. So I think that's constructive as well, Chris. So I know it's been a bit volatile here, Santos there, but it's definitely interesting now. I'm probably just looking for sort of signs of a bit more building here, but I think it sort of holds here and starts to build a bit of a base here. Yeah, it could be worth sort of following here. it's interesting. Look, I was reading about the sort of 70s again there last night, and some of the moves in energy and precious metals were pretty monstrous throughout that period. So we've had some pretty big moves here, but not to the same scale. So,
So our market, even though it's rallied and been strong, you're saying that it's a bit milder than what we saw, the gyrations in the 70s.
yeah, I mean, some of the energy stocks and some of the precious metal stocks were a lot larger than we've seen so far. So, yeah, but look, that period lasted for a lot longer than anyone anticipated as well. And there was definitely some pretty buoyant years, some pretty negative years, and then some pretty buoyant years as well. So there were cycles within cycles there. But yeah, just interesting here that we're seeing, looking like it's looking pretty stretched here. I was seeing energy sort of, just show sort of signs of strength there. And we do have a bit of conflict going on around the world at the moment. So just interesting. We're sort of seeing a few things sort of line up here. Right?
Well, coal's also in that space, obviously different commodity, but also works towards producing energy, used for other things as well, depending on which coal you get. But you've got New Hope Coal. We have the weekly chart once more. This has really narrowed its range. So looking at the rally from 2021, these were some of these stronger stocks. And if we look at the historical best momentum companies, this idea coincides with some of the best momentum we've seen on the ASX in a decade. So they've sat in that top half. They've held a lot of that movement, and then they've sort of really narrowed down. So even though they're not trending right now on the daily chart, in the context of your studies of looking at market leaders and where runs can come from, is this a constructive sort of base formation that we're coming into or coming out of?
Yeah, I mean, you've sort of argued you had the little ABC there at start there, then you've sort of had a bit of a rally which sort of failed, then you've gone back to retest the low again. And then we sort of had a bit of a rally and then rolled off again here, which so look a bit negative on that false break here, but it's all it's done is just go back and undercut the low here. What that sort of shows is so throughout the whole period, so from, what's around October 22 to October 24 here, that it's basically sort of held in the top half of the chart here. So really, it's gone up for a couple of years. Pretty strongly, and then we've had a bit of a pause here, and we're still staying in the top half here. So we've got not struggled to go down too much here. So we've held up pretty well here. So this leaves it in a potential sort of strong position to potentially go again. So this is one that I sort of think is pretty interesting here as well. So we definitely got more coal uranium sort of. We obviously got. I mean, we were just talking about all the data centers getting set up around the world here, Chris, as well. I mean, definitely a massive expansion in those sort of data centers and stuff there, and the amount of energy required for those. I mean, you saw, Microsoft trying to get nuclear energy back online and willing to sort of do a deal to get it done so that they can secure their futures there. It's sort of indication of sort of what's sort of happening globally there. So I just think it's pretty interesting here that we've had, it could have rolled off here, but it hasn't done that. Had a really nice bounce there. And since then, look at the volume on that pullback so far. Really light on that pullback there. Nothing too constructive. The only volume there was probably the wick and the low here. So I just think it's really interesting. I think it might sort of do a bit more work here. But yeah, watching this one pretty closely there, I think, this has potentially got another chance to actually have another leg. So, I just think it's just worth sort of watching these pretty closely here. So that, I haven't actually sort of moved on these. I just think it's pretty interesting what's actually happening here at the moment.
Well, you talk about Microsoft and looking to get, was it the Seven Island, whatever it was, plant back up and running, and the futures over that. So we instantly want to think about what are the uranium miners on the ASX looking like. You've talked about the energy space. You've talked about what happens in oil. You've talked about what's happening in coal. And you did mention before that we had sort of a decent rally coming out of uranium, and then they've sort of been hit and pulled back a bit. But listening to you for a few years now, we've had this rally, the 180 to sort of 360, 370. But we've pulled back to where we are now, sort of 280. So we had 1, 2, 3, 4, 5, 6 weeks up, and we're 1, 2, 3, 4, 5 weeks down, about halfway. So is that positive from a trend strength perspective?
Yeah, no, that's a good pick up, Chris. That's spot on there. So you got the 6 week rally there. we've come back 5 weeks. We haven't gone to a new low here yet. We've actually held up pretty well. So it's a fair sort of pullback after having a pretty good run there, but maybe that's just a reset, all the way back here, and maybe we'll start sort of building again. So, I'm watching this as well. Sort of thought similar to you that it's had a really impulsive bounce there for that 6 weeks. So normally we're looking for, probably, equivalent in terms of in time here. So I think if it can hold here this next week here, not sort of go too much weaker, I'm probably hopefully gonna wait for this thing to tighten up here, maybe give us a little BCP or a little tightening pattern there, a little B wave break there. Could be anything set up there, just because that's had a pretty sharp jump there. Oftentimes when you jump like that, you normally have another leg as well. So it doesn't need to go to a new high. It could just go up near the high there or something like that. So, but yeah, this thing looks pretty interesting there as well. So, that's been a bit less volume in the pullback than the rally as well. So, just want to see price tighten right up here actually and hold that level. I think it'll be pretty interesting.
Nice. Well, there are many other aspects of the market, and one of them, different sectors, healthcare. We have seen that come off in comparison. You mentioned earlier, we have seen the strength in financials and so on. But Sonic Healthcare has been down and has been falling. However, it hasn't made a new low since sort of the April-May period. So is that positive? And why is it in your report? Is it a buy yet, or how do you see what's going on with SHL Sonic?
Yeah, so I thought it would actually, that sort of big fib level sort of was a good level to come in there, which worked out pretty well for us there. I thought it had some resistance at the 50% level, but I just didn't think it'd stay around as long as it has. So, I wish I'd written a few calls in there and then watch them expire, and then, hopefully it'll run through here. But I think it's done a little sideways congestion there. And I think now, we had reconfirmed sort of full year guidance there. So stocks had a bit of a jump the other day. So I think that's a good sign here. So I think once we sort of crack on through this 28 level, I think it'll kick on there. I think it'll just grind up towards the next level, which is around that 32.50. So I think, definitely a sector which has been under a little bit of pressure here. And so I think there's a sort of, quality stock there, sort of Sonic. So I just think it'll probably meander up to 32.50 there. So, I think it looks pretty solid overall. No, it's probably just not a move. It hasn't moved lightning fast here so far, so it's probably going to continue to just grind it out.
Another thematic that you mentioned being off-cycle, contrarian side of things, but looking towards other markets for an insight of how it can unfold. Chinese stimulus and then the market rallied, possibly New Zealand stimulus and the market rallied. We're to see that really run through, but we have seen Air New Zealand talk about refurbishing their planes. That was taken well. It's going to work well for other airlines doing similar sort of refurbishments. What we see here on the chart is this channel that you've been talking about. It's particularly down near the lows, talking about the opportunity within New Zealand, and now it's broken out and pushed up. So what's unfolding here?
Yeah, no, look, I think, we're sort of went to a new low, so a bit of a false break there in terms of that October low there. Probably just didn't go marginally, so went a little bit deeper there, but definitely saw the price tighten up here. And I just saw signs of sort of volume sort of coming in down on those lower levels there, so a bit of accumulation. So yeah, we've now seen a bit of a jump out of that range there. So, hard to replace these sort of asset sectors as well. Not too many these infrastructure assets left around the globe here are, listed. So quite like this one here. It doesn't have the yield there like the Spark does, but the quality of the assets, pretty hard to replace as well. So, I think it looks pretty positive there. I think it's a good sign that it's broken out of that little wedge there. So I think it'll sort of going to have a bit of a run here. So it looks pretty positive so far. So,
Falls. Now, a different part is a physical asset, but lifestyle communities. So we're talking about retirement living, that kind of thing. This has not been a great chart. So we've got 22, looking at just the price scale, we've got 22 on the far left from the weekly, going back to the end of 21, start of 2022, to where we are, 2024, coming into what September lows, seeing sort of 720, that kind of 730 area. We're now under the $9 mark, so it has rallied from the lows, but a far cry from the $21, $22 it was a couple of years ago. So with this, you talked many times about having sort of the bulk of the chart above and those sellers, and there was a lot of losers, a lot of people who were underwater with this holding. What puts it into your report now with all of this ahead of it?
Yeah, it's funny. I guess it's sort of like there's a lot of stocks in their sector have done pretty well, except now I think so. We've had a few issues there. I see that there's probably a big change coming there. Obviously, I think the CEO and the founder is sort of stepping back here, and it's going to be some changes made there. So I think the stock's had a pretty tough time here. It's had a bit of a bounce off that low there. Saw a bit of volume coming there, which I thought was interesting. But what I find more interesting there is the counter move so far off that sort of, this has been a pretty nasty sort of downtrend. So we've sort of bounced there for, 5 or 6 weeks. And then now we're sort of 5 or 6 weeks pulling back here. We haven't done a lot of selling there, and we haven't actually come back too much as well. So actually been holding tight there. So again, maybe not set the world on fire here, but does look like we, sometimes change can change the fortune of these sort of stocks as well. So that this one might be, a little bit oversold here. Still some pretty good assets in within a company here. Change of management might just be what this company needs here to sort of, it's still got some pretty decent sort of companies on the register there, Chris, as well. So, I imagine they might have had a say in a change of management as well. Some of the major shareholders there as well. So, just probably just one to sort of watch here. I think this looks pretty constructive there. The whole thing's sort of tightened up there. This looks like it's sort of struggling to go down here. So, we just might see this one recover. But look, definitely some risk in this one. But the change there might be. It's probably oversold here, but it'll probably take a little while to build here. But I think you might see it like a little ABC up to around $11 there, possibly. I think this.
Well, just to put you on the spot here as we're finishing the report, we are into the week of Thanksgiving where we have low trading volumes. Obviously, it's not the end of the year break, the Christmas, New Year's period, and it's not Easter, where most of the Western world is sort of having a break as well. So having these low trading volumes coming into the US, you've talked about trading into earnings season, and we have sort of a known news event. Do you adjust your trading at all when you come into something like Thanksgiving, where there's going to be lighter trading volumes, possibly more volatility with less in the depth? Do you adjust your portfolios at all, or you sort of hold your portfolios through? What do you do?
Look, just try and stay true to my process and stuff there. Look, you can, we're still a long way. I mean, still a long way from Christmas here, really. So still another month away here, Chris. So, market's had a pretty good run here. It's not, people sort of fall in the trap thinking that every, market's going to rally, through to January every year. So, it does a lot of the time, probably 70, 80% of the time. It definitely does stay firm, and you don't really get too much in there. But we have had it in recent times there. We have had a couple of, negative, Decembers. So we've had a few surprises in December there. So, just can't rule it out here. So, just stick to your process there. I'm just finding it harder to find good sales at the moment, the market being where it is. So, it's a matter of sort of staying with the positions you've got, trying to stay with those ones, and just any new ones that you're adding here, I think have got to be, good, I think, as well, almost looking for an element of safety as well, just looking for maybe that touch more quality in what I'm owning rather than trying to take anything on too risky. I'm probably trying to take on a touch more quality than it normally might be, just because we're, the Dow Jones has almost expanded 200%. That's a massive move here. With some massive gains as well. So, we got to run with momentum for sure, but and have in the back of your mind here that the market is getting up there, a bit stretched. So, I'm actually sort of trying to find a few little shorts to sort of hedge some of my exposure personally. That I'm a little more active than the average person, but I am sort of trying to sort of have the mentality to sort of try and take some more cash off here and try and not to deploy it straight away. And normally I want to spend, as soon as I get money in my hand, I normally want to spend it. So at the moment there, I'm trying to think, trying to not do that, trying to really, I'll only spend it on things that I really like and maybe trade the names that I'm in if they have a bit of a congestion, maybe add some line here. But I think you just got to be a little cautious here. Just make sure you're just betting a little bit harder at the moment. You're what you're in.
That's a very good insight to leave the report and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
We've talked about momentum leaders and the best performing companies on the market. We'll put a link to Gary's interview on Friday where he covered exactly that in depth, the best momentum companies on the market.